people are, generally dissatisfied. They're not seeing a lot of growth. They're frustrated, and these days it seems that they're voting no to a lot of things. So we could see more stress in the Italian market.
So Allan, how has summer fared so far? Can you talk us through what's been happening in the financial sectors?
Sure. So, basically what I can say is it's been a hot summer for equities in general, but there's a chill over European financials. So that's kind of what I'd like to focus on today. This was not a year to look at selling in May and going away, the typical adage. You would have basically missed out on at least 4 or 5% return. So that said, there has been certain sectors that have really suffered, and particularly because of specific events. The first event really was the Brexit at the beginning of the summer in June, end of June, where we saw, the European financials really sell off, not just in the UK, but also in Italy, which was quite interesting. Typically, you wouldn't have expected that because it was a very specific UK referendum. However, now we see that a lot of the European financials, the earnings going forward have been downgraded substantially. What we see on this chart here is, a substantial pessimism, I would say, in the European financials.
Absolutely. And what have been the differences in the banking sectors across Europe? How have they fared differently?
Sure. So I think the thing to do is let's look at the UK first with the Brexit. So on the 24th of June, obviously, we all know now, unless you've been in a cave, that there was a Brexit vote, that they will leave the European Union. The hardest hit sector, or one of the hardest hit sectors, was the financials. And there was already a lot of nervousness going into the vote, but after the vote, we'll see a chart later on that really shows, the slide down. Some of the hardest hit banks were Barclays, Royal Bank of Scotland, but really across the board, we saw a sell-off as they sort of investors questioned the ability of the UK economy to make the transition out of the EU. Now the stocks are slowly recovering, so there's some cautious optimism, but I would say it's like an iceberg. So we don't know what's beneath the surface, basically.
And we do have coming up, we have the ECB stress test on the screen here. So what was the outcome of this from the banks? Right,
so what this showed was that, when the tide goes out, you see who's wearing swim trunks and who isn't. Here we saw that there are, certain banks that took proactive steps to raise additional capital because they knew that it wasn't going to be sufficient. But there was some real surprises in there as well. I won't go into all the details, but needless to say, it wasn't a glowing report card for Italian banks. By comparison, if you looked at Swiss banks, they were actually included in there, some of them that are sort of pan-European type banks like Credit Suisse, UBS, and they actually have very low non-performing loans. So, it doesn't seem to be a lot of stress in the Swiss system.
You're right, and we actually have this image here which shows the difference in the different sectors. So following on from this, we've seen the cautious markets, we've seen the uncertainty over summer. So maybe you can talk us through this and also where you're looking to position your portfolios for the rest of the year.
Right, okay. So basically on this chart, we've selected a few important banks, both in Italy, in the UK, as well as in Switzerland. Just to give you a flavor of what's happened. So what you can see is the light blue line and one of the green lines, which is the dark green line towards the bottom there, are two UK banks, Barclays and Royal Bank of Scotland, which had an awful fall in after the Brexit. Between 30-35% at least was knocked off their share price, which is massive in terms of the amount of money that represents. But the other interesting thing here is if you look at the Italian banks, they sold off really almost in unison with, maybe not to the same degree, but very much correlated with the UK banks. And we say, well, what is the reason for this? Because UK has nothing to do with the Italian banks. But in fact, there's an upcoming referendum, constitutional vote in Italy as to whether they should stay in the EU or not. That's coming up in October, and with the result of the Brexit, I think people are now thinking that it is not an extreme possibility, but a more likely possibility that they may vote to leave the EU, even given all the other things going on that they benefit from. The people are, generally dissatisfied. They're not seeing a lot of growth. They're frustrated, and these days it seems that they're voting no to a lot of things. So we could see more stress in the Italian market. The last thing that I would point out here is if you look at the two sort of highest lines, or definitely the top line there, is the Banque Cantonale Vaudoise. Here we have a very domestic Swiss bank, and what you can see is it hasn't moved at all.
Very consistent, absolutely.
Extremely consistent, like the Swiss economy. I mean, they're dealing with negative interest rates, high currency exchange, but relative to everybody else in Europe, they're doing okay. Mm-hmm. And what you see on this chart is, the share price pretty much hasn't moved with all the other volatility in the market.
Fantastic. Well, Allan, once again, thank you so much for coming in to share your insights.
Thank you so much.
Well, that's all from myself and Allan, but if you did like this interview, then please do like and comment on dukascopy.tv.